All right, guys, welcome to this lesson. So, just as I promised you that I'll bring the continuation of our retail liquidity lesson, I'm here today to bring that your way. So, in the previous lesson, we look at the theoretical aspect of liquidity or retail psychological liquidity levels, and I spoke a lot about how to identify this level. Okay, I talked to you that these levels include support and resistance, trend lines, chart patterns, and how you'll be able to trade them using IFCs, order blocks, and supply and demand areas. Okay, so today we are just going to be looking at how we can identify these areas on the chart, how we will think like retail traders and use their ideology to make proper entry as smart money traders. So we are going to dive into the chart and then we begin to look at how you'll be able to use this liquidity to trade in the market. Okay, guys. So tomorrow we will not be able, or I think that's today. Today is Saturday, so we will not be able to have live session because I have a program to attend, and when I come back, I need to rest. Okay, so maybe Sunday I'll record a new lesson. Either Sunday or Monday, I'll record the next lesson and upload it as well for you guys to watch. And then if you have any question, my DM is open. Chat me, ask your questions, and I'll respond to you. If you have not subscribed to our channel, do well to subscribe and also sign up with the broker link in the description of this video to Deriv, because that is the broker we are using. I'll come out with other recommendation later, but for now that is the broker we are using. So do well to sign up with them. Okay, now let's continue. So let's start this boom 500. So previous videos or lessons I've been using currencies, but today I want to show you that we can use these same ideologies on currencies, indices, uh, boom and crash, and so many assets in the market. Okay, so now, as I said in the previous video, what we are looking for is, first we need to identify our IFC areas, our structure, our trend, our inducement. Okay, so after we've gotten these areas, we need to know where our liquidity is located. Okay, being it support and resistance, being it trend line, being it chart patterns, name them. Okay, we need to understand where they are located and how we can use them to make entry in the market. Sometimes you can look for the liquidity level first, and then you look for demand zones, OBs, IFCs that we have already learned about, that are close by. Okay, now before we look at few examples, we might not be able to look at all of them. What will happen after the lesson, I'll be making videos on different types of chart patterns. Okay, because if I want to fuse it into this lesson, we will not finish now. So later on after the lesson, I'll find days and be making videos on specific chart patterns, and then how you'll be able to identify them in the market and how retail traders trade them, so that you can be able to get the idea to use it in trading your smart money concept. Okay, so as you can see here, we can see market is bullish. Okay, market is bullish here, so it means we are looking for the buy. Though market got here and ranged a bit, that is beautiful. I like how the setup here is. So in general, if we look at this chart, you can see we are very bullish. on boom 500. Okay, so that is our advantage here. So now what is going to happen is this. Let's start from here. Okay, so this was our last low before this move. I think this was the highest point before this low was created. So come in. Let me get my important tools onto the chart. So you need the horizontal line, also the ray. Which one else? Let me see. I think the vertical line, then our crosshead, the highlighter, the rectangle. Okay, the polyline is also important for us. I think for now, okay, then these two guys also short and long position. There's one thing I'm looking for. Okay, for now we can use these guys. All right, so this our last high. Let me change the color. Let me make it deeper. Okay, our last high, and then our last lower low, and then market. Sorry, market begin to move up. So here we had a change of character. Sorry, yeah, change of direction here. Let me see. Yeah, because we are down here, so we had a change of direction over here. Okay. All right. So now we know our direction. We are going to think like the retail traders. Okay. So now here, you see over here, these guys will begin to mark their trend line here. Okay, waiting to trade the breakout, right? They are waiting to either buy or to trade based on breakout. Okay. Now, some will also mark this as their resistance level. Okay, let me use the rectangular tool. Okay. So this is their resistance level. They are looking to sell over here. And these guys are also looking to buy over here or sell when market break this and retest. Okay, you know, retailers are always about breakouts, retest, and then candle patterns to make their entry. Okay, so now let me show you something here. First of all, we were in a downtrend, so here a lot of them will have this area. Okay, we call it, we have what we call the conservative trend lines and the aggressive trend line. So those who will be using the aggressive trend lines will be looking for buy here. Okay, because of the retest, they'll begin to buy. All right. Now what happens? Market, after forming this low, breaks this trend line. Okay, and we know we are in a downtrend here, so that means we need to continue with the sell. That is before we became bullish here. So we need to continue our sell. So as a smart money concept trader, all you need to do is to mark this trend line, and then you come back and look out for your inducement area. Since we are in a downtrend, you look for where the recent inducement is. This is not a valid pullback, okay, but here is a valid pullback. So when market breaks here, we have an inducement formed over here. Okay, so that is our area of what, inducement in this case. I'll represent that by X. Okay, now once you get your inducement area, then now the next thing you need to do is you need to look for your valid zone. Okay, so let's see here, this let me see, this candle took the high of this guy, so this an OB. Okay, but this OB has been retested by this guy. Okay, so this mitigated. So per our concept from the OB, we need to move our uh, zone to the next. Let me take this guy off for now. I'll come back there. We need to use the next candle as our zone, but first we need to see if there is imbalance. Okay, now we know our uh, inducement has been taken. The next thing we look at is for imbalance. Okay, but as we can see here, there is no imbalance in the system. Okay, this has cancelled out this guy. I get me. So in this case, we don't have a valid zone to trade here. So as a smart money concept trader, since we don't have a valid zone to trade from here, we will leave this trade. But a retail trader will continue to look for a buy, or others will continue to look for what? A sell. Why? Because some of them will be looking at this area as a flip zone. Okay, flipping from what? Demand into supply. Are you okay? So as price taps there, they are looking to what? To sell. Are you okay? All right. So now those who are selling will still come and hit this surface, and then market will bounce back, come back. Then now they'll begin to see trend line. So they begin to get uh, two vibes. Okay, trend line touch first, then second they decide to buy. They decide to buy. Then market would now break the trend line. Maybe their SL is in either here, this low, which will serve as liquidity for the smart concept guys, or this low. So now what is happening now is smart money concept traders are going to wait for these areas to be taken out before they make their decision. Okay. And now don't forget, even before we start to buy, we are not just going to buy from the low here. We begin to look out for certain vital points, as I discussed in previous lessons, like change of character, break of structure, and all those stuff. So here, for instance, we have a break of structure here, okay, because there is a candle close. But here we were having what we call liquidity forming all along. Okay, trend line liquidity forming all along. Okay, so now this is our break of structure. So we will now continue to look for a confirmed low. How do we confirm a low? As you know, we are in a downtrend. So what do? We have to look for our inducement. So this is the leg that broke structure. So we have to look for the first recent pullback, valid pullback here. So where's our first valid pullback? This guy took the low of this guy. So this is our first valid pullback. So this served as our inducement. Remember, we didn't tap on a higher time frame zone here. So this is our inducement. Okay, IDM. Now, here is our last highest point, okay, before market broke structure. So since market took that recent low, that is our change of character, okay, from what we studied. This is our change of character, okay, this point. So now it means that we will begin to look for what? Buys. Okay, good. So now let's dive into, though these places are liquidity, we didn't get any valid point to take buy or sell here. Are you okay? So we will not concern ourselves. We don't want to become part of the liquidity. That's one beautiful thing about smart money trading, because it makes you to avoid unnecessary entries or unnecessary trades. Okay. Now, now that we have confirmed that we are changing into bullish, okay, Now candle body close here, this is equal high, so this now is a valid pullback because this red candle's low has been taken out, so this is a valid um pullback for us. So that is our uh pullback point, but it didn't take any inducement, so we can't confirm this as our new high. Okay, that's one thing you need to understand. So we look for our new high, but then this pullback is valid. This pullback is not valid because this red candle is not equal with this guy. All right, so this is not a valid pullback. This is not a valid pullback. Here, no valid pullback. Then now we have a valid pullback here. Okay, and then we have a high. Now, because we have a valid pullback here and this high was able to take this pullback, so this becomes our inducement, confirmed inducement. Okay, so that is our inducement. Good. Now, this inducement confirmed our high here. Beautiful. Now, once this high is confirmed, remember that we need to buy because we have changed from bearish to bullish. Okay. Now, as I said, we have aggressive trend lines and conservative trend lines. So those who retail traders that are using aggressive trend line will draw this trend line down to trade their break out trend line and to make a breakout entry. Okay, so now as you can see, price broke below. They'll say, okay, candle closed below. There's a retail uh, sorry, there's a retest here. So they'll begin to what? They'll begin to sell. Okay, but as a smart money concept, once you see this inducement has been taken, the next thing you do is you look for your valid order block in this leg. Okay, so now where is our valid unmitigated order blocks? This guy here took the low of this guy and that is an OB, but there is no imbalance here. So we move to the next candle here. We didn't get any imbalance. We move to the next candle. Also, we have a little imbalance there. So you can mark it down. You can mark that zone down. There is a little imbalance and there is no retest there yet. So if price drop here, we can go on to lower time frame to look for change of character or single candle order block to make our entry. So now the retail liquidity we are looking at here is this trend line. Okay, so I'll do it RX, meaning retail liquidity. Okay, let me bring the label down, bottom. So retail liquidity. Okay, now once this trend line breaker, all we need to do is to be waiting for price to mitigate our nearest. Good. Now, um, price didn't return into this zone. Price reversed around this area. Okay. Now, there was no break of this candle low. That is why we couldn't use this guy as an OB. Okay. So we will let this go. Now, we look out for our next point. You missed the trade, all right, but it was to your own good. Now, in on a good day, if I am taking maybe 15 minutes as my higher time frame, it means I will get this area as an order block. Okay, but I don't want us to make this video lengthy, so let's move on. Now, another thing you can use to trade from this area here is where they are going to be buying, some people will be buying from here as support. Okay, so these people will start buying, then they'll put their stop losses here, price comes, takes the stop losses, and then it goes into demand or our OB, and then price move down. Now price have broken structure here, so we move on. Okay, so structure BOS created, because we are in this thing. Now this is the lowest point before we created the break of structure. So this become our new low. Okay, this becomes our new low. And so our high, our low. Now, where is the nearest pullback or the first recent pullback after the BOS in this leg? That is what we need to look out for first. So let me take these guys out so that we have our clean charts to deal with. Okay. Now, this here is not a valid pullback. You guys know. This is also not a valid pullback. This is a valid pullback. So this is our inducement. Price has taken out the inducement. Okay, so the next thing we need to look out for is our area of what? Interest. Now look at this. This candlestick didn't take the low of this red candle. Okay, so we cannot use these guys as an OB. Okay, that is order block. So what do? We look out for our next closest candle that can be used as an order block, which is this guy. But it didn't also take any low here, which means that still we don't have any valid entry. This is the beautiful thing I like. But one thing is this, the time frame I'm using here is where we are not getting the opportunity, but you can get the opportunity on other time frame. I don't want to make this video long. Now, trendline traders will also start trading on this trendline breakout. Some will also buy here, put stop losses here. Sorry, put stop losses below, some below the inducement, and then they'll be taken out. Market goes back up. All right. Okay. So all these guys are part of what? Liquidity. All these people buying as uh, support here. In this case, it will work out for them. Okay. But in most cases, they'll get what? Liquidated. So one thing we need to understand here is we always want to look out for areas where retail traders are looking to buy or sell, and then we make our decision from there. I will make another video to put more clarity on this. I think I have to look for a day and make a lengthy video on this one, where I'll show how we can trade these areas perfectly. But for today, we only continue to look at the way we can identify them. Okay, so there are people who will be trading what we call double bottoms and so on and so forth. So with the trend line, we can see it continues. Here, people will be trading and looking for buy. They put their stop losses where the inducement area is. They are taken out, and price comes to this zone, and then price move away to this demand. When we go on to the lower time frame, you want use that this area is a valid demand. Okay, even over here, if we go on to the lower time frame, here is a demand. I will show you this in the next videos that we'll be looking at, and my old students will understand, because I told them even from the higher time frame we can still identify demand zones. That's why I'm saying that if I want to go by just this time frame, we will say we have missed a trade. But here, if I want to go by the full knowledge that I have, that I have not imparted that side on you onto you guys yet, we have a zone here, valid zone, which after liquidity, this retail liquidity has been taken out, inducement taken out, place out well, and then you move this imbalance. So it's a qualified zone here. This place we have this imbalance, so this is a qualified zone because it didn't get mitigated. Price breaks trend line, comes there, and then price push up. Do you get it? And this repeats in the market. We can see there is another break off. So this was our previous break here. Then our next break is here. Okay, so high, low, confirmation. Then you can see the trend line continues. Okay, these are liquidity points. And then we have this side too, the buy side liquidity, because there are people who be marking this as channel to break and retest, and then they take their trade. Okay, but in this video I will not talk about how to buy and sell on both sides. Okay, I'm only dealing with the identification. So here also, what's our inducement? This is not a valid pullback, this is a valid pullback here. So this is our inducement over here. So this inducement. And remember, inducement, you don't need candle closure. Okay, and you can see price taps into this imbalance, and also price taps into this OB, but then this OB is not a proper OB because there is no imbalance in this area. Okay, all right. So unless you are trading this entire uh, imbalance zone as a zone, okay, that is when you get this trade or this entry. And then here market begin to range. So this is where the support and resistance people will start coming in to trade their support and resistance levels. Okay, as a smart money concept, this will not move you. Yours is to continue to only look out for what you want to see in the market. So the chart pattern, as I said, we have different types. Okay, the rising wedge, the descending channel, and so on, the triangles, and these all can be identified using this how do we call it, trend lines being drawn here and there. Then some common ones also in the market is the double bottom, and then the double tops, the triple bottoms, and co. All right. So those of you that are able to identify, for instance, somebody will say here is double bottom. Okay, so they want to trade it based on that chart pattern. Okay, the probability of this being taken out and price tapping into this area is very high. Okay, okay, here you can see also we can have this trend line here, and price taps beautifully into this zone here. Okay, and then it went. This is a valid demand. It's a valid demand. Right now, we are now dealing with the identification of demand and so on. So these are the ways we identify these patterns. Here, for instance, these guys will be trading here as what support. Price breaks this area and taps into the imbalance here, imbalance zone here, which if you trade the 50%, you should um, make this trade. And you can use the lower time frame entry strategy to make your entry. Okay, so here people will be looking at trend lines to sell from here, and then they'll be liquidated, and then that will help you to what, move market above. Some people will also be trading their resistance levels over here. Price takes them out. That is liquidity swept. Okay, but though there is no valid entry zone here because there is no imbalance and proper OB here for us to make trades. So guys, this is how you are able to identify these levels in the market. This is just to show you how you identify them and not to how to trade them. You look at how to make entries as we move on. So I'll see you guys in the next lesson. Stay blessed.